GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. We are here to make sense of an on-chain world in constant transformation. I'm Kyle Reeded, your host for today's episode. And today we are talking about price predictions for Bitcoin, ETH, and SOL in this coming bull cycle. So not price predictions in general, where it's going to go in 10 years from now, but over the next couple of years. And so a few things we're going to cover. One, how long is this cycle going to go for? We're going to look at that. We'll cover the total market cap of crypto, and then we'll look at market caps and predict market caps of Ethereum, Bitcoin, and Solana. We'll be comparing them from one to another from past cycles. We'll be comparing market caps from past cycles. We'll be looking at Bitcoin dominance, ETH dominance, and trying to make some predictions of where these prices are going over the next couple of years. So it's a lot of assumptions, but this is a very useful tool to develop your plan for what you want to invest, when you want to sell, how much you want to buy, so on and so forth. And you want to develop that plan early. And then, of course, it doesn't mean it's going to go this way. I don't think that these are going to be 100% accurate by any means, but it's a starting point for your investment portfolio. And then over the cycle, you need to update your analysis, update your thesis, depending on certain things, whatever you think is going to dictate where the market is going. So we're going to cover so much in today's episode. It's going to be a really, really good one. If you like this type of content and you enjoy this episode, please subscribe to our channel below. If you're watching on YouTube, if you're listening on Apple Podcasts, Spotify, please subscribe and give us a review or rating. If you're on YouTube, make sure to comment and like. This is what helps us grow. We need you guys to help us grow. So please continue to subscribe, like, share, all the things that help us grow our content. Okay, guys, let's get into this. This is going to be a good one. But before we do, let's take a quick second to hear from our sponsor.
Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early.
All right, welcome back to this price prediction show. We are starting out with Bitcoin, and then we'll get into ETH and Solana afterwards. But what we want to do here is first give us a framework for the length of the cycle and how the cycle is going to function. From there, we can start to make some predictions on our assets, which of course we will start with Bitcoin. Up on the screen here, if you're watching, you can see a chart with a whole lot of lines. You're probably like, what is going on here? I'm going to walk us through what this is. So first things first, I just want to look at these green and red lines. What these are, the tops is the green and the bottom is the red of each of the past Bitcoin cycles dating back to 2014. Okay, so we have 3 cycles, 2013 actually. We have 3 past cycles. And the reason why I wanted to do this is I just want to get an idea of the average length of cycles. Now, the interesting part from this is they are very, very, very similar. So if we look at from green to red in the first cycle, so top to bottom, we're looking at about 396 days. In the second cycle, 365 days. And in the third cycle, once again, exactly 396 days. So pretty wild. So we have a pretty good idea of what the length from top to bottom anyway of the next cycle should be. The other thing we can look at is from top to top of each cycle. Again, when we look at that between the first and second cycle, we see 1,461 days. When we look at it from the second to third cycle, we see 1,400 days. So very close, about 2 months off. And so we can make an average of that and guess around 1,460 again for this coming cycle. And what these numbers give us is an approximate, and again, this is not perfect by any means, but it gives us an idea that somewhere around October of 2025 should be close to the top of this coming cycle. And then the bottom would fit somewhere around November in 2026. So again, not perfect by any means, but we can guess that they're somewhat along those lines. Now, why can we guess that? Well, there's a few sort of reasons why people think these cycles are so specific. Part of it is because of the Bitcoin halving. These happen every 4 years. They're a known time. And so typically people tend to think that this is what creates these cycles, is the inflation rate of Bitcoin is cut in half. And so there's less supply on the market, which creates a bull run. I don't think that's the case. I think that's a coincidence, but definitely has some part of the structure. I think what's really causing these is liquidity cycles. And so what we've seen since the financial crisis back in 2007 is governments reset interest rates back to zero, and they have these sort of liquidity cycles that they've been doing. And this is the US, China, Japan, Europe, all the biggest nations in the world. And basically they print a bunch of money and keep interest rates low. And it tends to go about 4-year cycles. And then they tighten things and bring it back. They stop printing money. They might raise interest rates, so on. And so on the screen here, you can see a picture of global liquidity. So this is global liquidity across these nations that are going up and down, the rate of change. And it happens to be around 4-year cycles. And so this is what I believe is a bigger impact on crypto, because this is also what's impacting tech stocks and other assets. And so all assets right now go through these sort of cycles. It's not just crypto. And so I think this is, and this is very accurate on the dates of the tops and the bottoms are very, very similar to that of crypto. It's quite interesting, but that's what I see. And I think the same cycle is going to play out. I don't see why it doesn't. And so I do think these numbers of these sort of lengths here give us a pretty good foundation of the length of the next cycle. Now, from this, we can start to make some predictions based off of when we think the top will be in, which, as I said, is October 2025. So then what we can do is we'll start with just a typical price prediction here of these assets. So if we look at this like blue, white, and purple or pinkish line that's going up here, this is a trend line, a regression channel. And basically what this is looking at is network-based technologies, so technologies that become more valuable as more people come on top of them and use them. Think of like a telephone, the internet, et cetera. These are all network-based type technologies, Apple, Amazon, et cetera. They all have a similar growth pattern where they grow in this sort of exponential way over time. And they will often, so the gray line here is your sort of trend line, and then they can get oversold and they can get overbought. The blue is overbought, the purple here is oversold. Crypto, for example, has been in the oversold, or Bitcoin is the chart that I have up here, has been oversold for the last little while. Of course, we've been in a bear market. But if you've never seen this before, I can show you it for basically any big tech company. Here's Apple, that's had the same following this regression channel since 2002, since after the dot-com boom. And I can go along for Google, Amazon, they all follow the same thing. Now, the rate of increase is different depending on how fast the technology itself is growing. But ultimately, it's a really good indicator of growth of network-based technologies. And so we can do something as simple as, let's just follow these charts here. As you can see, in each bull market, we go well above the trend line. And then in the bear markets, we go below. Now, over the last cycle, we went less, right? So we were 2 standard deviations is what it's called, overbought in the last 2 cycles. And then just the previous cycle, we were only 1 standard deviation overbought. And we went more than 1 standard deviation oversold in this bear market. So we can assume, do we go back to trend line? Do we go higher than trend line, et cetera? Whatever that is, we can make an assumption here. And so if I just put my mouse here on the trend line itself on October 1st, 2025, I just go back to the mean reversion. So back to the trend line of the growth of Bitcoin, we reach $434,000 per Bitcoin. Again, if you're just listening on the podcast, you might want to be watching this on the screen because it's just much easier to understand. So that's if we make it back to trend line. If we go to 1 standard deviation above trend line, which is what we did last cycle, we would be up at $1.06 million per Bitcoin. Now, that's a bit crazy, but it's not out of the cards, I would say. Now, let's say we don't even go back to trend line for whatever reason. Let's say we just stay on the trend line we're on, which is 1 standard deviation oversold. We've never had that in the bear market, but it's definitely possible. Then we are looking at a $182,000 Bitcoin. Again, if we go to Apple, their first 2 big cycles also were 2 standard deviations oversold, and then they went down to 1, and now they kind of stay below / on trend line, right? Hasn't really gone over that. Now, Apple's, decades old company, whereas Bitcoin is not. So I would think that Bitcoin continues to outperform and probably reaches trend line. But again, it doesn't mean it's going to happen by this date. This is a theoretical date that we made up based off previous assumptions. So again, don't quote me on these, but it gives you sort of an idea of where prices could go if we look at this. Now, this is just one. What we want to do is look at more areas. How can we find more areas to assume or make predictions of where this price could potentially go? So the next one I want to look at is, let's compare Bitcoin to other assets. Now, Bitcoin is the largest crypto asset, so we can't really compare it to any other crypto assets, but Bitcoin is known as digital gold. And so one thing that people will often compare it to is gold itself. And so the market cap for gold is around 12 trillion, okay? Bitcoin's market cap is currently sitting at 141 billion. In the last cycle, it did get up to about 1.25 trillion. It was a 10x away from what gold has done, and we're currently more than 10x away from gold. So is it possible that that's somewhere that Bitcoin could get to? Potentially, but that seems a little bit crazy. Let's just look. If Bitcoin did reach gold's market cap, then basically what that would give us, if Bitcoin was at a $12.5 trillion market cap, that would give us a price point of $595,000 per Bitcoin, which, isn't far off from what I said if we just reach the trend line of Bitcoin's market cap in this cycle. To me, that seems a bit far-fetched to get that high if it was to compare to gold, which obviously it is a better version of gold, in my opinion anyway, then maybe it could reach something like that. Or maybe it gets some sort of percentage of gold's market cap. It doesn't necessarily have to get exactly there, but there's just another idea to give you sort of a potential price point that it may get to. Now, I've got one more that we can do here for Bitcoin, and that would be looking at Bitcoin dominance. And so one of the things that is quite interesting here is we can look at Bitcoin dominance from each cycle. And so again, on the chart here, I have the Bitcoin dominance. This is basically the percentage of Bitcoin's market cap compared to the total crypto market cap. And so if we look at this here, we can see the tops of each cycle of crypto. And generally at the top, Bitcoin's percent dominance becomes the lowest because you have all these other tokens that are growing as well. And so if we look at the top of each cycle, it's at basically its lowest point each time. And so 2 cycles ago, we were sitting at about 35%. Last cycle, we hit as low as 38%. And so I just put a trend line of like maybe where we'll go. Who knows if it gets lower or higher, but somewhere around 42%-ish of the total crypto market cap. So what we need to do now is let's just look at what the total crypto market cap could be. Again, using our regression channel, using the same green and red lines. And basically what we have here is a crypto market cap of potentially around 15 trillion, okay, by the top of this cycle. If we get back to trend line, if we go 1 standard deviation over bought, we're sitting at about 35 trillion. And for 1 standard deviation over sold, which is around where we are now, but we continue to grow obviously through that channel, we would be sitting at about a $7 trillion market cap. So that gives you a bit of numbers of where the total crypto market cap could go. But now what we want to do is let's look at the Bitcoin dominance and where would that leave us if we hit either one of these marks. And so if we were 1 standard deviation overbought and the crypto market cap hit $15.3 trillion, assuming what we just did for the dominance here at around the 42%, that would give us $728,000 per Bitcoin. That's if we're 1 standard deviation overbought. If we just reach trend line of the crypto market cap, which would be about $7 trillion market cap, then that would give us, $7 trillion market cap of Bitcoin. That would give us $328,000 per Bitcoin. And if we're 1 standard deviation oversold here on the crypto market cap, that would give us about $147,000 per Bitcoin. So we have a nice range here of somewhere around 150,000 to about 700,000, if not more. I guess on the one there, we hit over 1 million. So really what we're looking at here, if we were to take everything that we just looked at, the market cap dominance, if we were to look at the price predictions around gold, and if we were just to look at the regression channel and just what it would be if it was overbought, oversold, or reaches trend line, we're looking at around a low of like 147,000 to 188,000 for Bitcoin. That seems pretty reasonable. It is a 3x basically from the previous all-time high of Bitcoin. If we look at sort of the mid-range, we're looking at about a 328,000 to about 595,000 for Bitcoin, which again seems a little bit high, but with ETFs coming in, more demand, then potentially this could be something we hit. I don't think it's an area that we would stay at long if we did, but it's definitely an area that we could hit. And then finally, the kind of bull case, the outrageous case here would be the high of 728,000 to about 1.2 million. There are a lot of people, some people on Twitter that will call for these sort of numbers. I don't think this happens. I think that's just a bit too far out there. The market cap of Bitcoin would be just so large. They would have to bring trillions and trillions and trillions of dollars into this asset. And I don't think we do that by 2025. I do think maybe by 2030, these kind of numbers are more feasible. But anyway, it's nice to get a range of some sort to give you just an idea of where this could go over the next few years. So that's our starting point with Bitcoin. Now let's move on to Ethereum and see what sort of analysis we can get from there. We have a little bit more data we can take when looking at Ethereum because we can compare it to past cycles of Bitcoin. So predicting the price of Ethereum for this cycle. Again, we want to look back at the timeframes of our cycles, which we know, again, from the green lines here, we're looking at around 25 October top for the cycle. If we were to hit that, let's move over to the ETH chart and put ETH on the regression channel as well. So again, this is a channel that shows network-based technologies growth. It's the same for Apple, Amazon, etc. And if we chart down our October 2025 top for the cycle, then what we're seeing here is a potential, if we go back to trend line for Ethereum, we hit about 21,000 for ETH by 2025 in October. If we go one standard deviation over bought, then we get up to 65,000. That would be pretty crazy. And if we just stay along the trend, which we're currently on, which is one standard deviation oversold, then we are looking at about a $7,500 ETH, which wouldn't be too much higher than it was last cycle. We hit about 5,000 last cycle. So there's just some quick numbers of looking at just the regression channel, same as we did for Bitcoin. Now, some other interesting areas that we can look at is looking at the price structure of ETH versus Bitcoin. So this was last cycle. If we compare Bitcoin from 2013 to 2016 to ETH in 2017, 2020, it tracked it quite well. And so meaning this was sort of Bitcoin's first cycle versus ETH's first cycle. It had a very same price structure. Numbers obviously a little bit different because they have different tokens, amount of tokens, and so the prices will be different. That's fine. But in terms of the price action, it's almost identical, which is quite interesting. So then what we can do is if we look at Bitcoin in its second cycle versus ETH from 2020 to today, so ETH's second cycle, also a somewhat similar price action in terms of just how high it went, almost the exact same level when you're on a chart there and comparing. And then this was taken a couple months ago, but basically reaching kind of the same point here of entering into its sort of next cycle. And so then what we can do here is if we look at, well, what did Bitcoin do in its third cycle versus what could Ethereum do in its third cycle, matching that price because it is quite similar. This would bring Ethereum up to a little over 15,000, about $16,000 per ETH, if it just followed what Bitcoin has done, which is a nice metric, I think, to look at because it's just that we've already seen a crypto asset do it, a crypto asset that is known as, digital money. Ethereum has also sort of picked up the narrative of money with its triple point asset thesis. And so you could think of something with monetary premium that's digital, pristine collateral as, potentially doing something similar, just seeing as it's followed its price action from the previous cycles. And so potentially we could see a very similar thing play out. Now, maybe it's higher, maybe it's lower, I'm not sure. Ethereum is definitely a different asset than Bitcoin. Ethereum is a smart contract platform that has apps and L2s building on it, whereas Bitcoin was just sort of money. So in that sense, I think it probably goes higher, but who knows? But again, just a nice comparison to look at there. Another thing that we can look at is market caps. So again, ETH and Bitcoin tends to follow each other, somewhat similar on market caps. And last cycle, Bitcoin hit about a $1.2 trillion market cap, 1.25. ETH hit a $560 billion market cap. So if ETH doubled from its last, which would put it at about 10K, it would reach the same sort of market cap as Bitcoin, be a little bit over that, probably be around 11K to reach the same as Bitcoin did. So again, if we're just comparing to past, that could be something that we could see. Again, that puts ETH around the 10, 11K range for the top of this cycle. Same as we did for Bitcoin with the dominance, we can do this for Ethereum as well. So up on the chart here, I have the ETH dominance versus the total crypto market cap. Now, this one, we don't have as many data points. So I don't take this one with a lot of confidence by any means. But we've had two sort of cycle tops that we could see where Ethereum was a 25% of the total crypto market cap. And then in the last cycle, Ethereum hit about 22%. And so let's assume, again, just playing around with the trend here, I've got a blue trend line down. Let's say we hit 20% of total crypto market cap for Ethereum in October 2025. If we just hit trend line of the crypto market cap, that would give Ethereum a $26.4 thousand mark for Ethereum at the top of the cycle. If we were to hit one standard deviation over bought, which again, that would be up here, ETH would then be a 58,000 per ETH. And then if we were one standard deviation over sold, then ETH would hit 11,000.8 per ETH. So again, not a perfect metric by any means, but somewhat useful for us to get some predictions here. And so if we look at, we combine all those together, and by the way, I'm doing the math. I have it from a report that I wrote. I'm not doing this in my head as we record here, but the ranges we have here for ETH would be by October 2025, a low of 8.5 to around 16K. That would be anywhere from a 1.5x from past all-time highs to about a little over a 3x from past all-time highs. The mid-range for ETH around 19K to 26K, and then the high would be 58 to 88,000 per ETH. So again, the high seems a bit ridiculous to me, just like I thought it was with Bitcoin as well. But I do think that the low or the mid, so somewhere around 10 to 25K for me seems to be pretty reasonable for ETH to hit. I don't think that's that big of a gain, or just based off past cycles, we've seen those sort of gains before. We've already seen a gain like that at this high of market cap in Bitcoin last cycle, so I don't see why Ethereum couldn't do the same. But obviously, who knows? But a good starting point nonetheless. That's Bitcoin, that's Ethereum done. Now let's move on to Solana. This one's a little bit more harder to predict, but let's try to predict Solana's price by the top of next cycle, which I think is October 2025. We don't have a ton of data points because it's only had one cycle previously. So if I have the chart of Solana up here, all we really know is that, okay, it reached about $260, $270 last cycle, about an $80 billion market cap, and it's currently sitting at about $32 billion. So one of the things that we can do is look at the market cap of Ethereum. Solana is a smart contract platform just like Ethereum was. And so again, Ethereum hit about $560 billion in its second cycle. And so could Solana hit that in its second cycle? Well, if we look at Ethereum's first cycle, it hits about 140 billion, which is almost double what Solana hit in its first cycle. Now, Ethereum had basically no competition in its first cycle for smart contract platforms, whereas there was a lot of competition last cycle in Solana's first one. So that's probably why it didn't see as high of a valuation as Ethereum. And I would expect that plays out again this cycle. I don't think it hits the numbers that Ethereum has been hitting. I think it grows more than Ethereum this cycle. I just don't think it hits that market cap. But I mean, let's obviously see what happens here. But in terms of what that number would look like, if Solana, which was about 53% of ETH's market cap last cycle, if it did it again this cycle, then it would reach about a price point of $714 or a $302 billion market cap. So that gives us sort of one number we can look at. We don't have a regression channel for Solana. It doesn't have one of these like Ethereum Bitcoin does because it's just not around. Hasn't been around long enough. But one interesting thing we can look at, we compared the Bitcoin and ETH prices from previous cycles before. This one with SOL and ETH is very, very interesting. So this chart I have up on the screen here is ETH from its first cycle, 2017 to 2020, compared to Solana in its first cycle, 2021 to today. And again, the price structure of these first cycle tokens is unbelievably similar. And if I put Bitcoin in here, it would look almost the exact same as well. So really crazy. In terms of like the price point it hits, the structure of the price, it's almost identical. It's really, really crazy to see. And so then what we can do is look at the ETH from its second cycle and then look at Solana and its potential. So we have both cycles here for ETH, first and then second. In Solana, we have its first cycle, which matched the Ethereum one almost perfectly. If Solana follows Ethereum of last cycle, which I do think could happen, again, this puts Solana somewhere close to $1,000 a token. So about $950 to $1,000 if it just follows the same sort of pricing structure as Ethereum did last cycle, which very well could happen. I don't see why that is not the case, but definitely something to look for. This chart is just so identical and similar. It's really quite crazy, to be honest. Okay, the next chart, I'll go back to market cap comparisons of SOL and ETH. So I did talk a little bit about this of it doesn't reach. So this is looking at the chart that's up on the screen here is the market caps of ETH, both cycles, and then the market cap of Solana, which doesn't match up the same. The price one was quite similar, but the market caps not so much. Again, probably to do with competition or the fact that Solana has a bunch of tokens last cycle that were still locked up. So they were vested. They did not count as the market cap. So that could be a reason of why it actually looks smaller. Most of those tokens are now unlocked. So it's a bit different to look at it. But ultimately, if Solana did reach the same market cap as Ethereum, that would put Solana up around a $500 billion market cap, which would give it a token price of $1,351 at the top of this cycle. That would be a 5x, more than 5x, almost a 6x from its high last cycle. That would be pretty incredible, especially if you're looking at where it's at now. That's more than a 15x from where it is at today as I read this. So that would be a massive, massive run for Solana, but definitely something that has potential, though I think there's just a lot of competition, so it makes it quite difficult. So there's not really much else in terms of data that we can use for Solana. It's hard to do revenue models and stuff for Solana because it's not a profitable blockchain like Ethereum is. You can't look on a lot of history because it's only been through one cycle. We don't really know a lot. So really, it's just comparing from ETH, comparing versus market caps, and then making guesses from there. So all the data I have here is we have a low of somewhere around $700 for Solana, which again would be still pretty incredible. That's a 3x from past all-time highs and still a massive run from here, more than a 10x from here as I record this. The mid-range, somewhere between $900 and $1,300 for Solana. And again, that's if it's matching sort of ETH's market cap, which would be a huge, huge run up. And I don't think that that's taking into account the highs, meaning the bull case, like very, very high at Solana takes over, which is the same as the highs I put for Bitcoin ETH that I just don't think really happen. But if they did happen and we just had some crazy super cycle for Solana, then maybe you can find something higher, but I don't even know what that would be. So here's a quick review up on the charts here again, on the screen. I just have our Bitcoin, our low of 147,000 up to 1.2 million. It's a massive range, but again, I have a low, medium, and high range up on the screen here. ETH, again, 8.5 to 16.5 on the low side, highs up to 88,000. Solana, somewhere around $700 to probably $1,300. Maybe it goes higher, but I don't really see that happening. Either way, these are all massive, massive gains for the entire ecosystem. And then I just want to remind everyone watching this, if we just look at the total crypto market cap, I think it's pretty clear we're going up to 15 trillion plus this cycle. And that's, by the next 2 years, not even, that we're hitting 15 trillion. And so you can be invested in basically anything in this space, and it's going to do well over the next year or two if we have a cycle like I think we will. And there's potential for this to go even bigger, but it looks like we are set up for a really big cycle here. Now, look, I don't know that this date is going to work out, this October 2025. It's really going to depend on the liquidity cycle, which is what I showed you guys at the beginning of this video. And so this is something you really need to watch. You need to understand macro. Crypto is going to get crazy and euphoric, and there's going to be all this excitement. You're going to think it's taking over the world, but crypto really is just a reflection of global liquidity. And so whenever this line here gets up, we're going to print a bunch of money over the next couple of years for sure. Interest rates are probably going to go lower. We talked a lot about this in this show, but at some point that's going to tip back over, just like it has every basically 4 years here. And whenever that happens, that's likely going to be somewhere around the top of the crypto market, as well as like other tech and other assets as well. And so it's really going to depend on how much money do we print, how much liquidity comes into the system, and how long does that stick around for. And that's really why understanding the macro side of things in terms of interest rates, liquidity, inflation, etc., why this stuff really matters. When you understand the business cycle, it makes understanding the cycles of crypto much, much, much easier. And that would then allow us to sort of move our top dates and our bottom dates of the cycles, which then could allow us to change our predictions of our lows, mediums, and highs of Bitcoin, ETH, and SOL. So anyway, that's how I sort of develop a framework around my price predictions. I know they're large ranges, and there's lots of things that can change throughout, but it gives me a nice framework, gives me something to look at. And instead of just sort of like shooting from the dark this entire cycle, I've got the things that I'm watching and I understand the triggers and the implications of those. So hopefully you enjoyed that. If you did, again, please subscribe, like, comment, all the things to help us grow our content. If you've got any other feedback, any other predictions, please put in the comments below and let me know your predictions. I'd love to hear your thoughts on this and what you're thinking will happen over this coming cycle. All right. Thank you, friends, so much for listening in. And I wish you a wonderful day and good luck in this coming cycle. Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.